Oil is down today amid reports that Israel has agreed to limit its response when it comes to attacking Iran to military targets only, avoiding Iran's crude infrastructure. That has apparently eased concerns about a supply disruption, oil down around 5%. However, Israel's Prime Minister Benjamin Netanyahu said, quote, "We listen to the opinions of the U.S., but we will make our final decisions based on our national interests." Let's get more on the oil market from Eric Nuttall, partner and senior portfolio manager at Ninepoint Partners. Great to see you.
Good to be here.
Is that the reason you think oil is down?
I think so. And it's a good reminder in terms of energy investors why you really don't want any geopolitical risk premium or discount in the oil price, because it's very difficult to model. I think what we're seeing now is an unwinding. We just went from the lowest net speculative interest. So the paper demand for oil hit its lowest level in record a few weeks ago.
Record bearish positioning.
Record bearish levels. And a lot of that, I think, was driven by an increase in shorts being put on by algorithmic and CTA, so essentially computers. They're very bad at modeling geopolitical risk. And so as soon as there's any headline that should suggest that comes off, what you've seen, I think, is a covering. And that has meant, we did that, and now you get a headline like today and people just fade it. So I think we have to set the table in terms of where do things stand today, because things undeniably are fine today. It's more about a fear of what may be in 2025. People are looking at a market where weak demand growth persists. We know this year has been very underwhelming, especially due to China. Some people even model negative demand growth this year out of China. There's modest growth. So that's been a disappointment. And people are extending that into 2025. Those same people are saying, well, non-OPEC members are expected to grow supply by 1.5 million barrels per day. So that supply combined with another year of weak demand means bloated balances. Those same people that are forecasting 1.5 million barrels per day of growth next year missed the mark this year by 500,000 barrels per day. And so why should we put so much stock into the same forecast going forward next year? We think people are far too optimistic on supply growth at the current price, especially for U.S. shale. People still reference growth in U.S. supply. Well, that's true year on year, but U.S. shale has been flat for the past 9 months. And so in about 2 months' time, we think that growth rate is almost going to approach zero. And so as producers are looking today at a strip of roughly 66, 67 next year, where there is spare capacity held back by OPEC, there's uncertainty, et cetera, why would they try to grow, especially when they're facing a huge inventory challenge? And so the market, what I would say is fundamentals today are not perfect, but they're not nearly as bad to support the bearishness that is in the market today. For people to be more bearish today than during during COVID, when we're all locked in our homes, to me makes absolutely no sense.
What about supply growth from places like Guyana and Canada? We are going to get a fair amount of new oil, it seems.
So some is price sensitive, some is not. So Guyana is going to be the Q4 of next year. Modest growth out of Brazil. They've been huge disappointers next year. Canada, we're going to grow by about 250,000 barrels per day. That's largely price inelastic. So really it's going to come down to U.S. And what we are seeing is U.S. shale has been disappointing. People are mistaken year-over-year growth for sequential. And it's supporting this narrative that OPEC, when they meet in December 1st or 2nd in Vienna, they're worried about losing market share and such. I think that is a complete false narrative, but that's supporting the bearishness that we see in the market today.
Do you think OPEC Plus, though, or let's face it, the Saudis, will they dare to increase production? Two
variables to that. One is, will Iraq improve compliance? They have been so far. So Russia, Kazakhstan have. Iraq remains the uncertainty. I think if they continue to miss the mark widely, that's going to put pressure and perhaps influence Saudi and others bringing back barrels. The other is, what is their view on demand growth next year? The headlines are, OPEC cut their forecast next year, but I think certain countries within OPEC have their own demand forecasts that are a lot more perhaps closer to reality than what the OPEC number is right now. And so I do not believe that those who are armed with the best information on the world are going to push barrels onto the market when they are not needed, when they don't have to worry about losing market share to the United States, U.S. shale, because many people, myself included, see peak U.S. shale and peak non-OPEC production in the next 3 to 4 years.
The Republicans are firing shots at the Democrats, saying that President Biden allowed a lot of new Iranian oil to come onto the market, without getting into that. But
absolutely,
what is Washington's game plan right now?
Washington's game plan is to manipulate the oil market and ensure that the oil price does not go high, because a high oil price means a high gasoline price, high inflation. It's the most visible cost of living for a U.S. consumer 3 weeks ahead of an election. And so energy aspects of somebody whose work we've greatly value put in a note, so this is in writing of their opinion, that the White House was explicitly reaching out to industry participants in Asia, encouraging them to buy Russian barrels, and also basically saying, look, sanctions aren't going to be enforced, our own sanctions aren't going to be enforced on Iranian supply. And that the proof is in the pudding. Iranian exports, I believe last month, hit a record high relative to under the Biden presidency. And so domestic policies in an election year trump foreign policy. You can be in a de facto war with Russia and yet still be encouraging the purchase of barrels, i.e. boosting revenue for that country.
What about after the election, though? Does it make a big difference who's in the White House? I
think it will. Especially, there's been an ongoing bearish narrative from certain parties where every single day you're getting bearish stories. Even today with the IEA, the headlines is, they cut demand forecasts. Well, what they also said was that inventories have fallen massively over the past 4 months, and they've reached their lowest level since at least 2017. Like, that part's not making the headlines. It's always the bearish narrative about demand, weak demand and surging U.S. supply, et cetera. And so my hope is in 3 weeks' time, sentiment is going to be improved just by not having that bearish narrative rammed down the throats of most people. Plus, perhaps there's been some influence in the White House, as some people have suggested, encouraging, the purchase of Iranian barrels, Russian barrels, ensuring the market is adequately supplied so that they don't have a rising oil price, heading into the election.
So if Donald Trump regains the White House, presumably he will clamp down on sanctions against Iran.
You've had him publicly state that Iran has tried to launch an assassination plot on him. That's his belief. That's in the public domain. One would think that he would be mildly aggressive on enforcing sanctions that are already in place on Iran. And that could be quite massive. I think we're talking about 1.6 roughly million barrels per day that could be removed from the market. There is spare capacity held by the UAE and Saudi. I think given past behaviors of Trump to the Middle East in terms of telling them one thing and acting on another, involving Iran in the past, they're going to have to see it to believe it. And so even if Saudi and the UAE step in, what I think that will do is meaningfully reduce spare capacity, which is another concern that people have right now.
Sorry, give us that last point again there.
So there's this belief that OPEC has all this spare capacity. The 5.8 million barrels per day, which is not a real number. I think is materially lower than that. And so historically, as spare capacity is reduced, that's bullish on price. Because right now, why did oil not really react? Like, we reacted by $5, but you have, the potential for an actual physical supply interruption in the Middle East. Geopolitical risk is the highest in my 21 career today, and yet there's no risk premium in the oil price. Well, why is that? People believe, well, geez, OPEC has all this spare capacity. They can just turn a couple valves and it's on the next day. And so that's preventing oil from reflecting any semblance of the real risk that the world faces right now.
You think there's no risk premium
Zero,
right now?
Absolutely not. Yeah. We look at, so I will admit this relationship is broken apart this year. It's completely broken down. But if you look at where global oil inventories sit relative to demand, it would be suggestive of a Brent price today in the mid-80s. And we're very clearly not there today. And so there's a lot of reasons for that. I think there's a sentiment issue. You have very weak paper demand for oil. We see that in net speculative length remaining near lowest levels in history. This concern about rising U.S. production, even with a weak oil price, well, that's factually wrong because it's been sequentially flat for 9 months. We see that trend continuing, especially at the current oil price. So there's a bunch of false narratives that the market has become hypnotized with. But when I reflect on it, today, we've never consumed more oil than we have in the history of humanity. Global oil inventories are either at or near their lowest levels in history. And OPEC, after years of Herculean efforts to bring down inventories and negate the negative impact of this release from the Strategic Political Reserve under the Biden administration, they're not going to push barrels onto a market that is not receptive for them.
So we have Brent right now at about $74 US, and you said it would be in the mid-80s?
Mid-80s right now. We think oil is mispriced by about $10 per barrel using inventories as our measurement.